Welcome to VidZ. I'm Dr. Ted Noel. Today we're going to discuss one of the replacement plans for Obamacare, the one presented by Senator Rand Paul. Now, there are several elements to each of these plans, and in Dr. Paul's replacement, he begins with the elimination of mandates. Now, this is a very good thing because, as we've discussed before, insurance doesn't improve healthcare. What it does is improve payment to doctors and to hospitals. So when we look at the plan and it eliminates mandates, what it is doing is improving freedom. It improves it both on the question of, do I need insurance, but also on what kind of insurance I want to get. I'm a retired person, so I don't need prenatal coverage in my plan. I can choose one without it. Or I can choose one that specifically covers something I really want covered. But the issue here is freedom. The second key thing on the mandates is, if I eliminate mandates, the states that have put all of these requirements on policies like Minnesota and the northeastern states, where you have liberal policies that said you've got to cover all kinds of things, 58 different things in Minnesota, those go away, because if an insurance company in Utah wants to sell me a plan in Minnesota, I can buy their plan in Minnesota with interstate sales of policies. So the things that raise the prices in various parts of the country basically go away. The second thing that Dr. Paul does in his plan is he really promotes health savings accounts. And health savings accounts have two parts. They have a big high deductible where that is covered completely by a deposit, and then you have catastrophic coverage on top. It looks like 100% coverage, but the thing that makes it work is, at the end of the year, if you don't use that big deductible chunk, it's cash in your pocket. That's a big incentive for people not to go use the emergency room, doctor visits, the hospitals, when they really don't need to. But it also guarantees them the ability to go without penalty if something big happens. And what he does is he creates a $5,000 annual tax credit for that amount. Now, this is different from a deduction. And let me make the comparison. If I have a house where I am making, let's say, $1,000 a month payment on my house payment, but I take the mortgage interest deduction, that will reduce my house payment by, let's say, 25%, just to pick a number. That means I am paying $750 out of pocket net. If I have a tax credit for the whole amount, I'm not paying anything. So what we would have on a $5,000 HSA tax credit would be all $5,000 is tax-free up front, whereas with a deduction, I would only have a benefit at 25% of $1,250 instead of $5,000. So it's a big deal. It reduces the cost considerably. The third thing that Dr. Paul's plan does is it deals with pre-existing conditions in a transitional way. We have currently shall issue rules that say if you've got something going on, the company will issue the policy. And he continues those rules for 2 years, but only for 2 years. During that time period, anybody who has a pre-existing condition will have the ability to get insurance. After that time period, then companies can go back to the rules which allowed them to either exclude for a period of time like 6 months or to charge a higher rate for it. He also includes what are similar to what's called COBRA, where you have the ability when you move from one insurer or another to have the coverage carry over, so that when you've had coverage for a pre-existing condition, it doesn't go away when you move to a new insurer. The question then arises, what happens with people who just didn't get insurance or have this horrible situation where they have no money, can't pay for insurance, and so on? We've discussed before how state high-risk pools can deal with this very small group of people in a way that doesn't distort the insurance market for everybody else. And when you take the federal government out of the equation, this is a very good thing. It allows a reduction in cost. Now, the next question that arises is, what about me? Let's say I'm a self-employed guy. I end up paying a high rate for insurance. Well, guess what? Dr. Paul's plan is different. What it does is gives a wide degree of freedom. Remember that key word, freedom, to join all sorts of groups. So let's say we have a people at a local church that say they want to form a group. We are members of community local church. And so you have 200 people at community local church who say, we want to form a group. Well, under Dr. Paul's plan, you can do that. You can get the group insurance, and now you can get group insurance rates, because when companies look at groups of people, they can say, well, we can spread risk over the entire group, and the individual cost is less than, say, somebody with already who's got diabetes or somebody with high blood pressure, whatever, going in. If they go individual, they pay the high rate, but as part of a group, they pay a lower rate. And the insurance companies are just fine with this. But Dr. Paul's plan lets the individual be part of a whole raft of different groups, not just a group at the employer. Finally, Dr. Paul's plan includes some guarantees for individuals, and they are two. One, a policy cannot be canceled just because you got sick. Right now, sometimes that happens, and that defeats the whole purpose of insurance. You're supposed to have something in case you get sick. Second, if you get sick, the company can't say, no, we're not going to renew you. The policy is guaranteed renewal. Those are good things that protect the purpose of insurance and protect the individual. Now, let's look at what we have for a score on all of these. And every one of these steps is big on freedom. The first one, when you eliminate the coverage mandates, that is an A+ for freedom. When you eliminate the mandates within the policies, again, that's an A+ for freedom. When you look at the pre-existing coverage transition, that's probably about as good as you're going to find and as sensible as you can be in terms of freedom. So I'm going to give that one an A. When you look at the tax credit part of health savings accounts, I'm only going to give it an A because health savings accounts, again, are putting the federal government where it doesn't need to be. But given that it is a large increase in freedom, again, an A there. When you look at the freedom to create wide groups for group insurance, A+. Rotary Club, community local church, whatever, you can form groups and then spread the risk. And finally, the coverage guarantees that protect what insurance is supposed to be, again, those are an A. So overall, I have to give Dr. Paul's plan an A+. It is a freedom-oriented plan and deserves our support. Any other plan that doesn't do the things his plan does is not as good. I'm Dr. Ted Noel. Thanks for watching.